This is a Stock Trading Reality Podcast, episode 91.
No strategy whatsoever, just kind of going off of fundamentals in the penny stock world, which we all know is kind of laughable. And
this is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host. A penny saved is a penny earned is one of his favorite quotes. Play trader.
Now, Chezz has been around a long time, way before even we started this whole podcast thing, and I'm sure he's heard me say it before, so I'm going to actually turn this on him because he doesn't know what the fun facts are before we even get started. But Chezz, what is my favorite quote?
Oh, geez. It's a Dumb and Dumber quote.
Not a Dumb and Dumber quote.
Oh,
more so a life quote, like a serious life quote.
A serious life quote. I know that you hate when people use that they don't have time as an excuse. That's the thing I tend to hear more than anything. A serious life quote. I don't know. You've thrown me for a loop.
I'll give you a hint.
You say a lot of stuff.
Benjamin Franklin said this quote.
Oh, yeah. A dollar saved is a dollar earned. And you love Benjamin Franklining everything in your life. So, yes, that's a highly focused thing that you do.
Can I nitpick real quick?
Go ahead. I'm sure I botched the quote, but it's close enough
a
for me.
Penny saved is a penny earned, but you're only off by 99 cents, so that's all right.
Yeah, 99 cents saved is that's I'm not even going to go any further. I was close enough, but yes, that is a common thing you say often. That's actually one of the most common ones that goes in one ear out the other because I'm so used to hearing you say it.
Yeah, it's if you've never really stopped and think about that quote, just stop and think about it, because if you apply that to especially your personal finances, and it can be applied to trading and all that sort of stuff too, but just from a personal finance perspective, man, that can make a whole lot of difference. Some may call me a cheapskate in certain scenarios of life, but hey, man, I'm just trying to make money by saving some money. That's all I'm trying to do. So yeah, penny saved is a penny earned. Benjamin Franklin, by far one of my favorite quotes. And yeah, Chezz, I'll give you full credit because as soon as I said Benjamin Franklin, you totally were all over it. So well played. Well, today we have, I'm actually, the interview has already happened, but I'm very excited about this one because he takes us on, basically he kind of kicks and beats up options a little bit, and his choice was something else. And there's nothing at all, we have against options. A lot of guests are trading options, so there's nothing wrong with options, but it was just kind of refreshing to say, yeah, you know what, options, I wasn't really feeling them. I wasn't really, they just weren't floating my boat. So I went, and then they, took us up a street where it was a street where we were not up much, but it's a good street to venture down. Would you agree with that, Chezz? I mean, it was kind of refreshing that the twists and turns we had on this one.
Yeah, it was good. It definitely wasn't, I don't want to say that we have some podcasts that kind of follow generally kind of the same path or kind of the ways they turn and which way they go and the zigs and the zags. This was definitely a unique one. Very, very interesting. And totally refreshing. I agree with you there.
Yeah, it's just, again, nothing against options, but it was nice to hear somebody say, yeah, options, yeah, phooey with them, screw them. I chose to do this. So listen to the whole thing. He's got really a bad attitude, but in a good way. And that doesn't make sense right now. But if you listen towards more of the end, you're going to see why as traders, we really need to have kind of this really bad type of attitude that Jaime perfectly summarizes, and which has really helped his account grow multiple hundreds of percent. So, without further ado, let's talk with Jaime. Jaime, hey, welcome to the show.
Oh, thank you for having me. It's great. Excited to be here.
Yeah, we're just we're not really rushing, but within the context of things, we're recording this right before a Clay Trading University live webinar that starts here in a little over an hour. So our introductions and all that had to be a little bit on the quick side, but Jaime rolled with the punches just fine. So I definitely appreciate that. Jaime was telling us that in the chat room for you listeners that are members of the community, he just goes by Jaime, and usually he's just hanging out in the lounge because he does have a day job, so he can't really be too active during the day. So I'm assuming some of you have interacted with him. So Jaime, you've mentioned you've listened to past podcasts, so you know what this first question is, but I'm going to ask it anyways. Where did you hear about the stock market? What, kind of piqued your interest about it? And then what eventually kind of shoved you over the edge in terms of, wanting to actually put some real money into the market?
It was a coworker of mine. He just kind of would dabble in the stock market a little bit, this and that, and I wouldn't say dabble in the stock market. It was all penny stuff. So that kind of got my curiosity, and I would go over to his desk at lunch, and I kind of peeked at him like, this seems interesting. I've always kind of had in the back of my mind. So from there, just watching a couple things that he did, I decided that, all right, I'm going to give this, the full weight and open up a brokerage account, and just started kind of just went at it. There was really no knowledge.
So he was dabbling in the market, penny stocks. What exactly were you observing when you were watching your coworker do stuff? Did he seem like he really knew what he was doing? Explain just kind of what you saw. I would assume that you liked what you saw because it eventually led you to sign up. But what exactly was he doing that, if you could try to summarize, what was his strategy? What was his approach to these penny stocks?
There was no strategy. I mean, you want to take it right to your PSSG, the Penny Stock Survival Guide. I mean, there was no strategy whatsoever, just kind of going off of fundamentals in the penny stock world, which we all know is kind of laughable. And it seemed at the time, since I didn't know any better, like, well, hey, this seems like a good idea.
So you say it seemed like a good idea. Now, a question that's going to determine how we proceed from this podcast is, did you throw your entire retirement account into the first hot stock pick that this guy did, or how did you test the waters? What was your approach to actually getting kind of into that?
Yeah, I sold my house and just put everything I had in.
There you go. We were waiting for one of these podcasts to happen.
You're smart man.
My retirement account, and I sold my house. I live on a cardboard box. No, realistically, I just took a small amount of money. Just something to kind of get my feet wet a little bit, and that's how I've always approached everything. At least market-wise, every little new venture I had, I kind of sampled sized with. I never was I always knew I didn't know a whole lot, but enough to kind of get a little experience. I kind of viewed every lump I took was just, a learning experience, if you will.
Gotcha. So did you get your first investment, trade, pick, whatever you want to call it? Did you get it from your coworker, or did you find this independently by yourself?
I found them independently by myself. It was just my coworker. He was doing it, and it enticed me in order to look into it further. So
okay, so it's not like you guys didn't have like a think tank or something where you guys were spending hours upon hours brainstorming these, nothing like that?
No, not at all. I mean, we did actually have a couple plays that we ended up talking about, and we were in together, but that was about it. Most of the time, we were in completely separate plays.
All right. Well, I want to hear about your first trade. So what was the ticker symbol? How long ago was this, by the way? Where are we at in kind of?
Context-wise, we're about five years ago.
Okay.
6 years ago, something in that range. My first couple of, let's be honest, they weren't trades, Clay. They were investments. My first investments was in a battery company. Like they did something with car starter batteries. Another one was a company that made plastic bags out of algae. That one was great. But I was an investor in all of these places. Not like a lot of money, just a little bit.
Right. But where did you come across them? Was this social media, message boards, newsletters? Where was your source of information?
Most of it was message boards, of course. The biggest message boards that's where most of them came across. And then I would just do a little bit of research into them, things of that, like attempt fundamental research, which knowing now it had no basis for whether the stock was going to go up or not. And then just kind of look at the chart and what little knowledge I had, see if it was something I liked.
So a little bit of a side question here. What kind of chart was it? Was it a line chart? Was it a bar chart? What was it?
It was candles.
Oh, it was candlesticks. Okay.
Yes,
all right.
yeah,
Well, he didn't just look at the line and say it's going to the moon. Okay. So I'll give you that. That's all right.
No.
It's a candlestick chart. Now, are you going to tell the listeners now that it's not as easy as just saying, wow, look at how little cash they have on hand. Just short them all. They're all garbage. Are you telling me it's not as easy as that?
Oh, it's definitely not as easy. I would actually, early on, definitely knew I would never want to short any stock. At least, I did take it upon myself. I read some things, like books-wise. I did read quite a few books. I didn't really take it to the whole next level. I didn't kind of take where I'm at now, of course, but I knew that shorting was probably a bad idea.
So you said you didn't want to short any stocks. Aren't like any stocks, or just you didn't want to short a penny stock?
Well, at that time, I didn't want to short. I didn't think I had enough experience. I was just kind of learning how to play the one side of the market. No, I would never want to short any penny stock, period. But
so I got to cut you off because you just said something that so many people just aren't considering. Is you realize you knew enough to at least know that shorting at your experience level probably wasn't the best of ideas. Is that a fair statement?
A very fair statement, yes.
And for you listeners out there, if you are like new, and I'm defining new as, I don't know, it's kind of hard to define new, but if you're just getting into the markets and you think that, ooh, this shorting thing sounds good. Oh, really? Shorting penny stocks? That sounds even better. You are just barking up a tree that's going to get you drilled. Now, don't get us wrong. I short, Chezz shorts. We'll figure out if Jaime shorts, but I have nothing against shorting, but Jaime absolutely hit the nail on the head. If he did anything right, looking back here at the beginning of his journey, at least he acknowledged, yeah, shorting's probably not something that I want to, do right now. And whether or not he really knew the true reasons behind it, he knew enough to just, that's probably not the right thing. And, these people out there, and Chezz and I see it all the time. We've heard about it, over and over again. They're new. They have small accounts. Therefore, hey, shorting sounds cool. Oh, really? Yeah, that makes sense. Penny stocks are all garbage. They're all going to go down. And they end up shorting penny stocks. And, sure, they get, maybe 5 or 6 wins in a row. And then, boom, something bad happens and game over, back to, who knows what. So you sent me on a tangent there, Jaime. But that's actually a super good point that I don't know if we've ever had somebody being kind of scared enough of shorting to not want to do it. Can you think of anybody, Chezz? I think he's one of the first who was actually kind of pretty nervous about shorting at the get-go.
So I think we've had a couple people, but yeah, the general, if you think about the common things that are known for people who have know nothing about the market, it's what, buy the dip, or, buy high, or buy low, sell high. Like that's the thing. So nobody ever says, sell high, buy low. And at the same time, once somebody starts to look into shorting something, the big words come in: unlimited risk. It could in theory go to infinity, and yes, granted, everything could go to the moon, but that's why we focus so highly on risk. But yeah, he's definitely one of the few people who's just like, nope, yeah, like just steering clear of it.
Yeah, so good on you, Jaime, to realize that shorting. Yeah, for you listeners, if you're new, you should be scared of shorting. I'm not saying to never do it, but don't even try doing it until, to echo Chezz's point, you really start to actually learn about proper risk management and all that sort of stuff. So sorry about that, Jaime, but I blame you. You just brought up a very good point. So I don't even know where you were, but you were nervous. You didn't want to do shorting, and you were finding these stocks on message boards. And walk us through a couple of those investments. I got to be honest, that's kind of pathetic, man. I don't have any room to talk, given my first penny stock investment was a muffler company. Yeah. But a car battery and bags out of algae. Okay, I guess that one's kind of cool sounding, but I don't know.
To be honest, it cracked me up listening to the PSSG because it reminded me so much of me. And you can ask my wife, because I came home like every other week with something new that was going to just change our life dramatically, because this thing is so infinitely cheap, and even if it hits 5 cents, man, oh man, it is a point where some I actually hoped it would go down, that way I could afford to buy more. And that's just one of the most pathetic statements ever, wishing something you're a part of actually goes down so you can afford to buy more of, well, something that's losing value. So
yeah, that reminds me of the Jeff Foxworthy. You might be a redneck if this is you might be drunk on Kool-Aid if you want a penny stock to go down so you can buy more shares. That's when you probably know you're drunk on Kool-Aid. So, but props to you for admitting that.
Yeah, no, and actually the one that was the plastic one, they were legitimate. They had multiple factories, just like you had mentioned in the survival guide. They actually were in a legitimate business. They weren't just putting out PRs, but so much of it sucked that it eventually, just went by the wayside. So.
Yeah, and that's a huge thing. And for those of you that like Shark Tank out there, a lot of companies have a product. There's no doubt about that. But just because a company has a product doesn't mean that they're guaranteed success. It doesn't mean that their stock's going to Dollarland, because there's a whole lot more that goes into a business than having a product. that's why, I mean, when you just start to look at balance sheets and stuff like that, and these companies are loaded down in who knows what kind of financing agreements. I can't figure those things out, but convertible debt, I mean, it's just nasty. So yeah, I mean, and that's the, that's just the thing where the bar set so low in penny stocks where people think, oh, wow, they have a product, therefore not a scam, therefore it's a worthy company. There's more to it than that. So
yeah, much more.
I mean, did these first couple investments, did they go okay for you, or did you, I mean, walk us through kind of how,
actually, all but one went all right. I was able to realize that, the light started to turn on, and I was able to get out most at even just a little bit of profit. There was only one that really took a hit when it reverse split, and that one kind of hurt. But for the most part, I wised up pretty quickly that these aren't really what they're supposed to be. So I was able to, at least what you might call mitigate my risk. I sold some when they would go up, and then eventually I just said, I'm kind of done with this. After so much time, I just realized that it just wasn't what it seemed it would be. Because if it was going to go anywhere, it should have been on that road by now. So
you beat me to my punch. I was going to ask you, at what point did it kind of take you? I don't want to say your eyes to be open to kind of how the reality of penny stocks and all this is, but you just kind of mentioned at some point, you just said, this is taking too long. It's not doing this. It's probably hardly trading. Liquidity probably dropped to nothing on some of these. So I'm assuming, is that the point where you realize that maybe you want to kind of take a look in trading some other things? Or is this the point where you say, this trading thing's for the birds, the whole market's rigged?
No, for a long time, there were those MMs, they're just messing with the stock, and that reminds me of the level 2 trading. But yeah, I did get fed up, and there was a long period where I just kind of casually would keep my eye out. I had the money in my brokerage account. If I saw something, but this was more or less, I stopped actually reading message boards. I really more or less, there's a couple of people I might have followed on the message boards that if, they might have mentioned something, I'd pull up a chart, see if I liked the chart. And if there was volume there, I would, I'd play it. And I did pretty much better that way than even attempting to do it the other way. So, and then I kind of played it more casually for a couple of years. And then it wasn't until really this year, more maybe tail end of last year, that I really wanted to move into something different. I enjoy the market. I love watching it, get 9:30 strikes. It's like Christmas. So I did want to take a bigger part of that. Whereas watching the penny stock market, you wake up and you're like, all right, 10 minutes is over with. Now what am I going to do with the rest of my day? Kind of a deal. I guess I could.
Whoa, 100,000 shares hit. Oh, yep, it's quiet for the next hour. Okay.
Yep.
Yeah, basically, unless there's massive dilution going on, then there's millions upon millions hitting. But
look at all those shares hitting the bid. Oh, look at all that. Yeah. So I guess because it sounds like, and correct me if I'm wrong, maybe you lost your passion a little bit and that you just went kind of more so casual, to use your words. But then all of a sudden, like you said, about a year ago or so, you all of a sudden wanted to get involved in it. Was there something that all of a sudden kind of sparked the passion again? Or, I mean, do you just have more money at your disposal? What exactly all of a sudden kind of converted you from, the casual state that you had been in for a couple of years to all of a sudden what sounds like kind of a whole different type of mindset?
A lot of it probably was a big motivator. Probably was a money mindset. Just that I'd taken on a new role. Things were financially better to where I could actually have a little bit more than just kind of playing around with, hundreds here, hundreds there, where I could actually put more into the market to where like I could leverage that a little bit better, to where it wasn't like I could take out $200 and then and whenever I put it in the brokerage, I knew, that's gone. It's gone. If I lose it, I lose it. It was never intended on, I need to get this back. But the disposal was significantly more to where I could put more into it. So that way I could have more options in front of me to do that.
Okay, that makes good sense. Things have changed a little bit, and you just feel like it might be worth more of your time at this point. So yeah, I totally buy that premise there. So, all right, well, you've made this mental shift. So where do things go from this point?
I really started looking into options. I had seen many, a lot of your videos, a lot on YouTube at the time, just, the different things that all the different aspects of the market, and I started really looking at options and just what you could leverage with the options, like playing SPY or Apple or Netflix or what have you. You could actually, play on those for $50, $75, $100, depending on what the premium of the option was. And so, and knowing that those are extremely liquid, and you're never going to have an issue if you decide that now is the time to get out. You're not going to have to wait for someone to come and meet your buy price. You're not selling, at $100 loss just because that's the first available exit you have.
So I want to loop back a little bit though. So, cause I want to kind of talk about risk, cause that's what I always kind of focus on. That seems to be where a lot of people turn the corner, including myself. So I know you said in some of these penny stocks that you used to trade, you just kind of had what was almost a mental kind of time stop. And you said, it's not performing. I'm just going to cut it before it just does nothing. You want to kind of put your money back to kind of use. So now you find liquidity heaven. You're trading these big names that have very, very liquid options, very, very tight spreads. What's kind of your outlook and your approach to risk? Are you forming a thesis based on the chart and then holding till you're right? Are you just holding until you reach that uncle point and you got to cry about how much money you lost because you lost way too much on that loss? What is your focus and what is your approach to risk at that time?
Well, when I first started doing options, I had a vague understanding of it, and actually I would play options like on a weekly basis as opposed to now where it's primarily daily. Where I would look at a chart and say, all right, follow the moving averages and pick out a price. And there really was no risk mitigation. There really was no stop loss. There was just a more or less of, put some money in, and if it's going to go there, if it's going to go there, if it's not, generally, which don't laugh, but generally once something like lost, like if I had $100 in it and I was down to 50, that's when I'd cut my losses. I know that's quite a lot. Don't laugh. But that generally was a rule of thumb. I mean, now things again have even evolved even more, but that was the start of options. But now I'm kind of working out the world of options as far as struggling a little bit with with how the volatility and theta and the delta, how that affects entries and exits. I'm getting a lot better, but just given the fact that you might look at an entry, the price of whipsaw and be right back at where you entered, but now you've lost 15 cents in value on the option. So I'm kind of feeling that out. I don't really do as much in options anymore as I was doing like 6 months ago, just because of what I know about risk and risk tolerance and trying to preserve your capital.
Nice. Now, just to defend you, kind of. Yeah, sure. Maybe your thing was, all right, well, if it goes down to, $100 goes down to 50, all right, then I'm out. So that was your very archaic type risk management system. But it's better than some of these people who are just like, well, it's either $100 is going to go into 1,000 or that $100 is I might as well light it on fire right now. So at least you still had a principle of not a total like flat out gambler's mentality, which we see all the time. So yeah, you're right. It wasn't the most sophisticated thing, but I would definitely not call that exactly a flat out, gambler mentality either. So good on you for that. So now I guess you kind of skipped ahead, but we'll piece in the cracks here. So you're trading option. I mean, where did you learn about options? Is this from? Did you like take my course, or were you just figuring this stuff out on YouTube videos? Where exactly, did you kind of fill in the pieces here in terms of what all of a sudden caught your eye, and then why you wanted to go with options, other than they're more liquid and stuff than penny stocks?
I do believe it was one of your videos I had come across on YouTube in regards to options that tipped me off to options, and then from there, it was more or less. I have taken your options courses, by the way, but at that moment, it was really just about what my brokerage had offered, which is pretty fair knowledge-wise, as far as presenting that stuff, and just whatever I could find around the market, like Investopedia, different things like that, just trying to get the basis of a basic understanding about it. I wouldn't say it was a master's degree of knowledge, but it was something enough to kind of feel like you had a handle on it.
Okay, and then you said, you're kind of struggling with, theta, price whipsaws a little bit, and then that of course affects your option premium. So was that all occurring before, or was that occurring kind of during this time when you were going through your broker stuff and Investopedia and stuff like that, or is that a little bit later down the road?
That was before. Now the biggest reason I don't have a $25,000 brokerage account at the moment, so I'm restricted to 3 day trades per week. So I've kind of set that aside a little bit. I've kind of moved into another venture, which I'm sure we'll come to down here in a few moments. But I to be honest, I haven't finished all of the advanced options. I probably have probably 6 or 7 videos left. So I think we just got into a little bit more with the volatility and getting volatility to work for you, which I'm assuming it's probably.
So is it safe to say that now, because you've gone through majority of the advanced options course, so I know that you've learned about volatility and you've learned about theta and all that stuff. Does it make sense now, knowing what you know, why you were struggling back then?
Oh, absolutely. Oh, yeah. It makes perfect sense now. It makes sense that why I was struggling so much. It's just a matter of I haven't actually taken the time, because I've kind of set it aside a little bit to actually get down and crunch and do more paper trading with it and really watch certain things throughout the day, just because I kind of set it aside as far as the options go at the moment. I would like to really have a better grasp of it before I start to really pound in the options again.
Absolutely. And the big kind of grand scheme point here I'm trying to make is that's the problem, and that's why free education, sure, it can work, but what Jaime just described is, yeah, it can get you enough to get started, like Jaime said, but then there's still going to be a bunch of little holes. And when you get enough of these little holes in your strategy, or enough of these little small holes in your understanding, eventually all those holes are going to create a big enough headache to where, sure, Jaime wasn't, blowing up his account or wasn't losing money hand over fist, but he certainly wasn't going anywhere either, and he was just kind of stuck in the mud. So
it's kind of just like treading water is where I've been at for the last 5 years, basically.
Right. So that's why, yeah, the free education can definitely get you over the hump in terms of to get involved. But I promise you, to be successful long term, it takes more than just knowing enough to get involved. You have to be able to get involved and then stay involved, and that's the whole differentiator between amateurs, wannabes, and then people like professionals. Getting involved, anybody can do that with a little bit of free education on the internet. Staying involved over the long term, well, to keep on echoing Chezz here, that's where the whole risk and risk management stuff comes into play. So what is this new venture? Can we jump to that? You piqued my interest. Do we need to talk about some other things before we get to that?
There, so yeah. Well, is there something that comes before?
I didn't want to get too far ahead, actually. And thanks.
Well, we'll let you fill in the pieces that you think may make the timeline more easy to follow. But yeah, piece in all the holes that need to be filled in. And I'm curious, what is this new venture?
Well, just at the present time, I trade. Actually, most of the time I trade is the Forex, and that's because of the video I saw that you did on one of the stock brokerages that was out of the Bahamas or whatever, and you kind of had said that you want these features, there's the Forex, which is available. And then, of course, took a Forex class. So from there, it's really.
Which you did not have to pay more money for, right?
Right. Correct.
Because you are part of Clay Trainer University. Swing. Absolutely. Look at that plug for the university plug.
It was just one of those things like, I've already got it, and let me see what this is all about. And I went through the course, and it was great. It was quite an eye-opener because I had no idea what the Forex was, and I didn't even think it was something that I could even trade. And
now, why didn't you think you could trade it?
Because I had no idea what it was. Let's be honest. I had no clue. I hadn't even looked into it. I've heard of it, and I just thought, it's probably not for me.
But it wasn't as nearly as complicated as what you thought was, because you probably already knew 90% of Forex trading, right?
Oh, yeah, absolutely. It's not complicated at all. And in fact, I like it just because Forex, when it's in bull mode, it reads the manual on how to bull mode. When it's in bear mode, it reads the manual on how to bear mode. When it channels, if you go back and look at all the data, it's just that, and it's open all the time. And for me, as a trader, I had FOMO. I was always a fear of missing out if I didn't, have time to trade through my day.
Chezz, I want you to just hop in and explain to the listeners. Jaime very enthusiastically said, "Oh yeah, I already knew 90% of Forex." What did he mean by that? How did he know 90% of Forex without ever having taken the Forex course?
So obviously the listeners couldn't see me waving my hands around trying to get Clay's attention that I wanted to take this next point, but you actually are perfectly in sync with me because that's what I wanted to jump into right now. So most people, similar to Jaime and similar to, like I said, probably, most of the traders out there, especially if you're newer, terms from options seem ridiculously overcomplicated, or, what is the spread on this, currency pair? Like, see, that whole combination of words will scare most people off. And to be honest with you, what Clay is saying, what Jaime has realized is that 90%, he already knew 90% of it, because a chart is a chart, and a chart is merely a reading of, not only supply and demand, but of human behavior, and human behavior tends to repeat itself. And that's how we can find good probabilities for setups and trades and so forth, and how to structure our risk correctly. But the whole thing is that a chart is a chart, and Jaime had already studied and practiced charts. Didn't matter if it was for penny stocks, didn't matter if it was for options trades, focusing on the underlying. He already understood kind of the premise and how to kind of read the charts and read the story of the chart more or less, and kind of develop a thesis. So all that other stuff that makes it seem extra complicated is generally just terminology. It can be learned relatively easy, but if you know charts, risk, you can really, and I'm dead serious on this, you can trade any product in the world.
Because at the end of the day, just to finish off the point, very well explained, is at the end, just at its core, what question do you need to be able to answer as a trader in order to make money? And I'm guessing as a listener right now, you're probably like, I'll let you answer this, Jaime, but listeners right now, you're probably way overthinking this. But what question do you need to be able to answer as a trader to make money? Jaime, what is that question?
Well, in the Forex, for me, it's whether the price is going to go up or it's going to go down.
Well, and in anything though, right? Not just in the Forex, in anything, whatever vehicle you're trading, you need to be able to answer the question, well, what do I think the price, what do I think the value is going to do? Do I think it's going to go up? Do I think it's going to go down? Or do I think it's going to stay the same? And that doesn't matter if you're trading stocks, options, bonds, Forex, commodities, rice, like the Japanese did and where candlesticks came from. It is what it is. And charts is just a tool to answer that question. Now, to be fair, some people decide, in order to answer, what do I think the price is going to do? I'm going to look at balance sheets. I'm going to look at cash flow statements. I'm going to look at management's past history. And they're going into all these different fundamental aspects. Again, to be fair, that works for some people, but it sure is, that takes a lot more time. Whereas me being Mr. Lazy, I just look at a chart and be like, all right, good. I'm good to go. I have I know what I think it's going to do. I might not be right, but the fundamental people, they're not always right either. That's why Warren Buffett, he loses money too by looking at all that stuff, because you can never know. But so yeah, that's I'm glad that we're talking to a Forex trader, Chezz. It's been a while.
It has been a while. We really don't come across them too often. We interview a lot of people who generally trade stocks or options, but and I'm not saying that the reason there's an influx in Forex is because Clay put out a course of kind of explaining. It's just that I think a lot of the students you realize, and a lot of listeners are realizing that, if, say, they have a full-time job and they still want to do some shorter-term trading, you can trade the London Open. You can trade the China Open. These are opportunities that are similar to kind of the New York Open here. And, it's after hours, so people can do it when they get home from work. So it's just another opportunity. And, if you know what you're doing, then, you're free to, like I said before, you're free to trade any market and any product you want if you know what you're doing.
And I want to ask you this, Jaime, what especially, or what particularly caught your eye about Forex? So you're going through this course. Is there one thing over another that really stood out? Or, I know you liked, or, the whole pattern day trading thing, which does not apply to Forex. So you mentioned that, but did anything else really stand out to you?
Well, basically that it's open from Sunday at 5 till Friday at 5. So for me, in my line of work, I might have time during the day and I might not. But when I'm done work, here just chilling, I actually got the Forex pulled up on my screen right now. So it's always open. And then the commissions, there is none. So if I decide that this really isn't working out, I could be in the profit zone. I see it turn in the chart. Whether I take a loss or just take a small gain, it's what I'm taking. I'm not paying $10 to get in and $10 to get out. So a $20 loss isn't a $40 loss. It's just a $20 loss. Let's say.
What just because I can see listeners being curious, what Forex broker are you currently using right now?
I'm using TD Ameritrade.
Oh, okay, gotcha. So I didn't even know they did Forex. That's
I absolutely love it. The interface is phenomenal. I've got buy, sell market buttons. I've got reverse or flatten in case for some reason I forget what position I'm in. I could flatten all my positions, but it's phenomenal. Now I haven't used anything else for Forex, but I really like their Thinkorswim for Forex.
And just so we're clear, You have not been compensated by TD
Not-
Ameritrade or anything?
not at all.
You're not
I'm
like
not-
a secret
let me
employee
check.
or anything?
Don't have any checks sitting around for them, so no.
All right. So, I mean, you said you're watching a little bit of context right now. It is 6:15 p.m. Eastern time right now. So the traditional market has closed. What are you? I mean, you said you're looking at a chart and it's open. So talk to us a little bit more. I think listeners, you've probably caught their attention. So what exactly are you watching right now in terms of Forex?
I'm watching the euro dollar right now. Actually looking to see if it's going to hold support at its daily low at the moment. Expecting that the presidential election will have some kind of volatility in the market. And when that actually hits, it's going to go, in my opinion, it's going to go big one direction or the other. In fact, last week when the Hillary Clinton stuff came out, and I don't like to talk politics, but when that came out, the feds were opening the investigation. The euro gained, I think, like 60 pips in about 10 minutes, 15 minutes, something like that, just because the strength of the dollar went down.
And yeah, I mean, that's not politics. That's just a factor of the matter. That was a market moving event. And yeah, the stock market also.
Yeah, it did.
Got absolutely hammered. So just for you listeners, the euro dollar, just picture that in your mind as a stock. That's just a ticker symbol. Chezz made a great point. I mean, you hear a currency spread and like, holy crap, a currency spread. What is this? And they give up before they ever get started because of the lingo. So yeah, great point. The euro dollar, what in the world? Just picture it as a ticker symbol. Instead of Jaime saying euro dollar, he said Apple. He said Microsoft. He said that's all that is. Don't let the terminology scare you off. There's truly nothing to be scared of. And just to reiterate, yeah, as far as if you're being annoyed by the pattern day trading rule, there is no pattern day trading rule in the world of Forex. Neither futures also, but Forex, since we're talking about that, it just doesn't exist. So that is a very straight way around it. So you're trading Forex right now. What are some of your favorite pairs? Obviously the euro dollar, if you're watching that. What other pairs do you like to trade?
The sterling dollar. Those really are actually the two that I trade the most. I don't really pay much attention to the peso dollar. I have traded it, but for the most part, I trade the euro dollar. It has the most. I mean, not that there really any of them have a liquid problem, but I see that does the most volume on average most days. So
you don't watch the yen either?
What's that?
You watch the yen?
I absolutely do watch the yen. I watch the euro yen and the euro yen and the dollar yen. I do watch them. I've just never traded them.
Yeah, the yen, and I'm not going to get into the fundamental stuff, but the yen has to do a lot with kind of who owns what and debt stuff, and that's fine. But yeah, the yen is usually a busy pair as well that I just kind of watch. So obviously, Clay had mentioned that, futures and Forex both don't have pattern day trader rules, which is totally awesome for those of us with less than $25,000 in our account. Now, here's the double-edged sword, though. So you're open to trade as much as you want. And a lot of these brokers, so I'm not exactly sure on TD Ameritrade. I should have probably Googled that before I asked this question. But what kind of leverage are you able to use, and how much of it are you actually utilizing?
Right now, I'm at 50-1.
Okay, so for context for listeners out there, and I'm sure if any of the listeners have looked into Forex, some of the top results you get, which are generally ads on Google, are trade the euro dollar for 500-1 margin, put up $1 and get $500 for it, blah, blah, blah. So 50-1 is much more reasonable of a margin level. Okay, so I feel better about that already. Clay, I know you're sweating over there a little bit thinking, he sold his house again and he's putting the whole thing on margin in one trade, but I want you to rest assured he's only using 50-1.
I was scared that he was going to have to sell his cardboard box that he said he's currently living in. And I don't know where you go after a cardboard box. I guess you just sit out in the rain, but so I guess, are you using real money right now, or are you just paper trading this Forex stuff?
I paper traded for a month, and I actually am using real live money at this point, and done over the last month remarkably well. So I just find that it's easier for me because the chart just says it all for me. That's all I can say is it just agrees with me. The chart just says it all. I find predictable is a word I don't want to use, but it has
highly likely.
There you go.
So you are good at finding highly likely setups that something may happen. And
yes.
that's what, keep in mind. I'm pretty sure listeners have never heard the word guarantee on this podcast, that you find setups that are guaranteed to happen, but you're finding setups that are highly likely. And that's why risk management is so important, because, hey, there's no such thing as a guarantee. So if those highly likely things don't happen, we'll just admit, hey, I was wrong, cut the loser, and then move on. So you said you've been doing remarkably well. I mean, are you willing to share, like, or have you taken like $100 up to $500? You know, I mean,
about 250 to about 750.
Okay, so you've
good old
your
3X,
account has increased.
Yeah,
You've well over a couple 100%. You've increased your account, and just doing very small right now, right? I mean, how much do you temporarily put into a trade?
Generally, I just do 10,000 units on the euro is where I started at. So that's about, we'll call it, I don't know, $230, something like that. And then now I do 2 units. I haven't done 3, which I have enough in my Forex because it's separate from my actual regular TD Ameritrade account. But I've earned enough to do 3 or 30,000 units of the euro, but I only do 20,000.
Okay, and I just want to preempt some of the greedy people that are probably listening. And yes, if you think this way, you're greedy. Maybe not intentionally, maybe you've just been brainwashed, but if you're thinking, wait, 250 to 750, that's nothing. You're missing the entire point about what Jaime's trying to do. As traders, we're in the business of building good habits. We're in the business of building a system that we're personally comfortable with. And after you have that, after you have the foundation in place, then you can start to scale up. Then you can start to increase position size, which is going to allow, monetary growth to grow faster. So don't be sitting there right now in the mindset. Like I said, if you've been thinking, 250 to 750, that's weak sauce, man. Get that out of here. You've been brainwashed by some of these marketers out there. That is not the point that Jaime's trying to go through right now. He's using real money. He's starting small like he should to build good habits, to figure out his system, to fine-tune the system. And then, and only then, I hope, Jaime, he will start to, after he gets all that in place, he'll start to scale up. So please don't just look at the monetary values. I know it's tempting. I know with a lot of the sales gimmicks out there, that's all that people want you to focus on, but all about good habits. And we'll actually put in a link in the show notes about the most important video I've ever done about all wins are not created equal. And that just goes back to the whole habit thing. So, well, first off, congratulations on.
Well, thank you. Thank you.
I mean, that's fantastic.
I have to say I owe a lot to you.
Well, go look yourself in the mirror, man, because you're the one putting in the hard work. But thank you for those kind words. But what are some of your favorite setups? Do you like a certain chart pattern that you like to try to find time and time again? Or, I mean, what are some of your favorite? Obviously, your favorite overall strategy is Forex, but narrowing that down, do you have any particular strategies that you like within Forex?
Within Forex, and it's a pattern that repeats a lot when it goes on, whether it's a bear or a bullish mode, where it just repeats the bull flag or the bull pennant and the bear flag and the bear pennant. It just, when it's going down, it'll repeat that pattern over and over and over in a downtrend, and the same thing going up in an uptrend. It doesn't always, sometimes it busts through that 10 and then the 10 SMA and then it hits the 50. But for the most part, it's highly likely that it's just going to repeat this bear flag or bull flag and then just kind of wash, rinse, and repeat.
Gotcha. And that's, wash, rinse, repeat. That's generally the way it goes. And like I always say in almost every podcast, the more boring your trading is and the more methodical and the more, robotic in a sense it is, generally the better you do. And obviously your account growth is a testament to that. But something that really generally makes or breaks traders, and I know a lot of it just ties into people's egos and, the need to be right is, I want to talk about taking a loss, taking a loss back when you first started trading versus you taking a loss and a mechanical loss now. What are kind of the glaring differences in either your mentality or your thought process, then versus now?
Then anytime if I were to have taken a loss, it was almost, I almost convinced myself that the next trade has to be good and has to be, profitable and make up the money that I had previously lost. It just was, I don't care for losing. And that was a mentality that in order to make this next trade a real winner, it would have to recoup what I lost and then still meet the monetary amount that I had set for in this trade. Whereas I go into each trade is going to lose. And if it works in the opposite direction, that's kind of my bonus. But every trade I put out is going to be a lose. And then we just, choose how much we lose or we don't lose based on setting our stop losses. So
And
so now it's just.
I'm sorry. My adrenaline's flowing. You got me pumped up, but I'll let you finish. Go for it.
Oh, I was just going to say, so now it's just a matter of fact that losing that money is kind of, there's an old philosophy in sales that, every time you hear a no, you get excited just because you're that much closer to your next yes. And it's the same thing with trading, that every small loss you get just means you're around the corner to that, potential big gain. Absolutely.
And again, for the listeners out there, I can picture it because I'm putting myself how I used to think. And what kind of piss poor attitude is that going into a trade thinking I'm going to lose? That's terrible. If I was a football coach or if I was a baseball coach, I'd have you on the bench with that type of attitude. Well, guess what, listeners? This is not sports. That is not, I get it. That is that may sound so bad, but I love it. I loved how you summarized it. You go into each trade thinking, oh yeah, I'm going to lose. Kind of like Eeyore from Winnie the Pooh. Like, but hey, the proof's in the pudding. Where has that just ultimate focus on risk management led Jaime? He's taken his account from 250 to 750. So yeah, that does sound bad. It seems, and Chezz talks about it all the time in past podcasts. We're brought up in a culture of you got to have a good attitude. You got to be positive. You got to, be motivated. You got to want to win. You got to just be, just go, go, go. And it is being go, 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 but he's going about it the trader way, which is focus on risk. And that's awesome. I love that. And I also found it, just before I forget, super interesting just because human psychology, where in your mind, there's almost like two levels of winner. Like you had a winning trade, but then in your words, a quote unquote real winner would be not only did you make money, but you had to make up enough for the losing trade. So I found that just fascinating that your mind actually broke down what a win was and then separated into two categories.
My mind is weird like that. But trust me, it took me a long time to get my head wrapped around that. It didn't, breaking our human nature that winning is the only thing we want to do. It takes a long time. It's just conditioning, though. I mean, you really have to get used to it and accept it. And then once you actually accept it, then you can finally, I feel, then start to move forward.
No, absolutely. So, I mean, just so we're clear, because I can see it now. Okay, I'm going to do Forex because this guy said that bull polls just repeat themselves over and over and over again. Have you ever had one where it doesn't repeat itself?
Absolutely. And in fact, that's the one where the cautionary tale of the Forex is that it can turn around in a hurry and by a lot. Like there's some serious whipsaws in the Forex. So that's where the stop loss comes into play, to where you're always at least protected against, if it's going to be a small, is it going to go down and stop you out, or if it's going to go down 100 pips and stop you out, you're stopped out. So just taking, obviously, that risk mitigation, making sure that everything is in place to avoid the big loss. But no, it doesn't always repeat, but it's very likely.
And you are prepared for when it doesn't repeat, right?
Correct.
And that's where, new people they don't get it. They just think, okay, bull pulls repeat, they repeat, and maybe they do 9 out of 10 times. But if you're not prepared for the time it doesn't repeat, things can get nasty in a hurry. Chezz, I know you got a question, and sorry, you got my adrenaline flowing, Jaime. And we got, like I said, this webinar tonight. I want to be yelling at all kinds of people. But I'm going to blame you, man. My adrenaline is flowing.
So, and yeah, you really summed it up when you said, they can go bad in a hurry and really, really quickly. So obviously you got to be prepared for, worst case scenario. And I love what you said earlier that, I just expect to lose. Like that's just, if you're prepared for that, nothing could really go any worse than that. But kind of pivoting to another thing a lot of people always kind of take a look at is, what exactly does your chart look like? Do you have, 80 indicators that all blend together and make one decade trade, or just, what does your chart look like? What do you kind of use to personally find your trades?
Typically my chart will consist of the Bollinger Bands, the 10, the 50, the 200 SMAs. And then my chart, actually, for my Forex, I have mapped out a ton of basically support and resistances. I just keep tacking them on. And that's what allows me to, in an instant, identify my risk versus reward scenario, where I have so much on there, I can actually look and say, well, here's my risk. And it looks like, this big, and what I'm going for, where my reward, my likely exit is that big. And I just can see it on my screen versus, and just do it on the spot, as opposed to necessarily taking out the time, but because the Forex can move so fast. And then basically I just watch across all time frames, whether it's 2, 5 minutes. Sometimes I'll pull up a 30 or a 1 hour chart. just to get a better broad context of the context and see what's going on with the day or even the last week.
Man, so from you looking over your buddy's shoulder, being like, oh, what's he doing? Oh, he's dabbling in the market. Oh, I want to do that. To what you just said about how you approach a trade and how you have your sports and resistances. And that sounded very intelligent, right, Chezz, what he just said? I mean, and all logical too.
It almost sounded like he went from being a puppet trader to, forming his own plans and logic and, setting his risks, setting his targets, and just managing winners and losers. It sounds like he's pretty much taking full control of his trading to me.
Yeah, that was it's fun. That's why I like these. It's Jaime. Can I be honest with you, Jaime? Can I be a little blunt,
Sure.
maybe?
Sure.
You sounded like a total mess when you first got started. You were just kind of like just running around, and right now you do not sound like a mess. And
I appreciate it.
And that's I love that. I go into every trade expecting to lose. I mean, come on, man. That's the worst attitude ever, but that's the attitude that you need to have. So that'll definitely be a quote from the podcast. But looking at the time here, we got to start to wrap things up. We'll definitely have to have you back. Would you come back at some point?
Oh, absolutely. 100%. Maybe once I get into futures or something, we can talk about that.
And also knowing that you have, I mean, you come to the Tuesday night webinars, right?
Yes.
Okay, I'm pretty sure I remembered your name. So can I interview you sometime about one of these Forex trades on the webinar?
Absolutely. In fact, I sent you something. I don't know, maybe it was 2 weeks ago. I sent you I didn't send you the actual trade with the.
Oh yeah, I remember you. All right.
Yeah,
we're good. We're good. All right.
It was the euro dollar. So.
That's right. That is you. All right. Perfect. Yeah, that was a great trade too that you took. So good. You've all now publicly heard. So for you Clay Trader University members, Jaime has now agreed to be interviewed for our some night on the Tuesday podcast where I can really get into the nitty-gritty details about one of his trades. And Chezz, watch this. Here's another plug. So if you want to learn about the nitty-gritty details of how Jaime's trading and how many other members are trading, all you got to do is join CTU. So, man, I'm on fire tonight with the plugs, Chezz.
It's almost like you've done a couple of these podcasts before, Clay. Only like you've done a couple.
Almost. Wow. So anyways, we're getting way sidetracked here. So we got to move on. Chezz, has a time machine showed up in Denver yet?
Actually I unloaded it out of the pod shipping container thing yesterday. So
Nice.
that's why I'm a little tired today. I was doing that all night.
Gotcha. It's a heavy thing. So Jaime, if Chezz were to lend you his time machine and you could go back to, the start, what would be the one bit of advice that you'd give yourself?
Get educated. Stop doing what you're doing. Don't tell me you think you know what you're doing. Don't do any of that. Get educated, no matter, what way it would be. I, of course, would recommend you because now I've been through it on this side. But no matter what, get educated and really learn about what you're doing before you just kind of jump in. I wouldn't say I jumped in 2 feet first, but I at least put 1 foot in the water. Whereas I guess I'm glad I didn't jump in 2 feet first, but I'd say just get educated. Learn what you're.
Is that your recommendation because the market's going to be there tomorrow and that you don't have to get in right now because it's not going to be there again?
Absolutely, because there is another day, and especially with, we'll plug the Forex one more time, that's all the time for 5 days straight. But yes, and that was the greatest feeling I had was I have to do this now. The biggest fear of missing out, when in reality you could take a week or even a year or 10 years, it's still going to be there. So.
And don't get me wrong, everybody's been in your shoes in that regard, that fear of missing out or the fear of, I have to be in the market right now, even if I don't know enough to kind of really be, wise and profitable about it. So obviously it's been an absolute pleasure talking to you this evening. Thank you for making time.
Thank you.
And the real question that's going to determine if this podcast ever airs is, what is your favorite movie?
Winnie the Pooh? And is Eeyore your favorite character?
Winnie the Pooh.
Oh, okay.
Dora the Explorer.
I would definitely have to say, growing up in a child, being born in the 70s, I would just have to encompass anything Star Wars related. Would probably be my number one. So.
Hey man, you're an American. That's a communist would never give that answer. So not that I ever questioned your. Never mind. We won't get into any of that. But
I do want to say, pullover. No, it's a cardigan. But thanks for noticing.
Dumb and Dumber. Well played, sir. Yeah. My wife had to explain that to me. I never quite got the joke until I realized, it's an article of clothing. Because in my world, articles of clothing are like sandals, shorts, and t-shirts. But
I noticed
anyways,
that people, you said people gave you a hard time for showing up in sandals. I'm wearing sandals from probably March through November. So I'm right
exactly.
there with.
Yeah, a little context there. So we had a meet and greet with members in Nashville, and I just showed up in some shorts and sandals, and people were like, oh, they're giving me a hard time that I showed up. I'm like, what? Is anybody shocked? Have you not seen the videos on YouTube? Like, people think that that's like some sort of act. I'm like, no, that's just how I dress. Like, it is what it is, man. So anyways, yes, I'm glad I have another sandal man here with me. What about food? What do you actually? Where are you? Where in the country are you?
I actually live in Michigan, and actually
You're in Michigan. We're in Michigan.
Well, I'm Sterling Heights, Detroit metro area, but I actually
you probably told me all
this
stuff. But I'm sorry. Don't take any offense to it. I get people mixed up all the time.
No. We had a conversation once a long while ago, but I know you're in the Grand Rapids area. I'm actually out there for work once or twice a month for a week at a time out in Grand Rapids area all the time. Kentwood, Wyoming, things like that. So.
Oh yeah, nice. All right. Well, what do you like? What's your favorite food? I was gonna say, if you're down in Texas, what do you like? But I guess, what do you like to eat up here in Michigan?
My favorite food all time, I could eat it every day for 3 meals a day, is pizza. Absolutely.
That's America. Kind of.
Talking to a Chicago native, so we're grown up and we live on pizza. Obviously, it's all part of a balanced diet. It's got some vegetables and a lot of meat and grease and everything else. That's generally not recommended by doctors, but yes, that's what I've grown up on, and I'm still here kicking it 27 years later. But now, what do you do for fun or hobbies, kind of outside of trading, and just what you do every day?
Basically, me and my wife, we'll run races. We have a couple marathons coming up, but pretty much that's it. I do work a whole lot run, exercise, workout, a little bit here and there. I used to be a big time bowler, but that was a decade ago. So,
how many, like, when you say marathons, are these like marathons, 26.2 miles? Are they like half marathons? Or
my wife's running a couple of half marathons. I have my first half marathon coming up, but really we just do a lot of 10Ks. Probably once a week.
So you like to just torture yourself then, huh?
I used to hate running a ton, but actually once you get used to it, it's not so bad.
All right, because I am not a runner, but
I wasn't one either. But my wife got into it, and I got into it, and I actually really enjoy it.
Interesting. All right, well, maybe I'll have to. I'm kind of going through a spin biking phase right now, but let's see. Where's a place where you'd like to visit someday? So if you could get out of Michigan, where would you like to visit?
Probably number one on my list would be Rome.
Nice.
Just been always fascinated with Italy, and all of Italy from the old days, things like that. Just would love to see a lot of the stuff that we in America don't get to see because we're just not that old. But going to see something that's a couple thousand years old would really interest me.
Yeah, my parents are big into kind of world travels now that they're retired and stuff like that, and they always just say how beautiful it is and how they don't make it like they used to, and obviously that's true because obviously there's been a lot of advancements in technology and structure and stuff like that. But yeah, you just can't go wrong with places like that. But what are 3 words you believe should be associated with successful trading?
Risk. I would say risk mitigation, but risk, patience, and education.
I like that. And risk may sound goofy, but assuming they've been listening this whole time, they know exactly what you mean by risk. Right. So, yeah, well said. Well, from one Michigander to another Michigander, thank you very much for hanging out with us this evening.
Thanks for having me. It's an honor. I'm glad I could be here. I've been a fan of yours for as long as I've known about that one message board. So this is an honor for me.
I can't wait to I can't wait to grill you for one of these webinars.
I look forward.
Maybe we'll try to do it next week. Are you around next Tuesday off the top of your head?
I'll be in Grand Rapids next week. That one's going to be cutting it close because I actually have to work right up until 7:00 next Tuesday.
All right. Well, I was.
Maybe we'll get him on the line for another week, but he's already got some plans for next week. But it would have been pretty cool if we could have. I wish you would have just lied, and then we could say that I booked a webinar guest on the podcast itself. But you're just too much of a stand-up individual, I guess. So, anyways, I'm just messing around. So, I think we'll have to try to grab lunch sometime then if you're in Grand Rapids for those.
Yeah, I'm gonna be there. I'm gonna be there all next week.
All right. Well, we'll put our heads together and figure something out. So, anyways, awesome. Jaime, thank you very much for hanging out with us. And I guess I'll be seeing you in like 20 minutes on the webinars. But thanks for sharing your story.
All right. Thanks for having me. I appreciate it.
For you listeners out there, a final few things before we go. First, if you're listening to this on the website, click that share button and leave us comments. We do read those and we'll reply. If you're listening on iTunes or any of the other podcast players, then please leave us a rating, especially on iTunes. The 5-star ranking really helps us out. And if you enjoy these and just want a quick way to kind of show some support, communicate to us that, hey, I find these helpful, then leaving us a rating on iTunes really does go a long way. And then finally, if you're listening on YouTube, which seems to be catching up in popularity, definitely check out the remainder of the channel. There's live trading videos, there's quick tip videos, there's some other random videos. So definitely check out the channel as a whole and get subscribed to that also. So thank you again to Jaime. Thank you again to all you listeners. We will see you back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.